this was your high conviction buy now, but tell us about one stock that you would want to stay away from and why.
Hoda, you might be getting this answer a lot from other people that you interview, but I'm staying far away from the meme stock craze that's going on right now. It seems like every week I hear people asking me what I think about GameStop and AMC. Still, this is months later that this has been a development. And there's nothing wrong with making money on these companies. I don't want to poo-poo that, some people have paid off student loans and done incredible things in a matter of days by getting in and out at the right time. The problem that I have with this is, do you sleep well at night when you're doing something like this? It seems very speculative, kind of like you can go put all of your money on red or black of the roulette wheel of a Vegas casino. But when people are telling me, oh yeah, I'm glued to my computer, I want to see if I'm making money on the hour or the minute, it's really not investing, at least in the way that we think about it. It really seems to be more speculative. Companies like this, when they go up that aggressively in value that quickly, it's not tied to fundamental performance of the businesses. It is due to valuation multiples expanding. In other words, more people are willing to bid these prices higher, even as revenue and earnings kind of continues to do their thing in a steady state. And that's really dangerous because the tide can turn at any time, and the market as a whole can collectively decide, we don't want to be stuck holding the bag with this, I'm selling. And that behavior tends to stimulate more behavior like that. Selling leads to more selling, and all of a sudden people who thought they were getting in at the bottom actually were stuck getting in at the top. And that can be very dangerous. You could very quickly, easily lose 70 or 80% or more of your investment in companies like this before you even know what happened in a matter of days. And so again, we're buy and hold investors. We're not trying to chase hype or momentum. Every company we've ever recommended on the 7 investing scorecard is there to stay, and our performance reflects a buy and hold. We're not getting in and out, we're actually even selling any of our positions. And I think that's a very different peace of mind that you get when you're a long-term investor, investing in innovation and growth, but you're not trying to look at it on a day-to-day basis like that.
Yeah, I couldn't agree more with you. Actually, today we're talking together on Monday, as of June 29th today. Obviously, by the time people are going to hear this, it's going to be the launch of your portfolio in a couple of days. But as we speak, my team is uploading a new collection on a stock card, and we call it meme stock collection. So people can basically just find the meme stocks on a stock card, and if they want to avoid, they can just mark them. These are the stocks that I wanna avoid. So thank you for bringing that up. But why is it so hard for people to ignore meme stocks? And how do you make yourself not getting emotionally attached or getting off balance of all the excitement that happens around meme stocks? What is that one trick you could share with the stock audience that help you avoid getting tangled in this whole craze of meme stocks?
It's an interesting question because it's not completely unfounded, right? Like the whole meme stock craze started because of the power of the crowd. There were some, analysts that were on Reddit and other social platforms that found out that a lot of these stocks that were thinly traded, low market caps, were kind of being manipulated by short sellers, right? They call them the suits on these social platforms, right? They were putting pressure on the stocks that they thought had no catalysts. GameStop wasn't going to go out there and increase its revenue by 300% year over year. AMC networks, there wasn't going to be 300% more people going to the movie theaters. There was a lack of things that would pop earnings. And so you can go short on those kinds of companies, or so they thought, because there was no danger of something happening. Until Reddit happens, until there's a mass buying flurry that takes place that puts a lot of pressure on those institutions that were short these stocks to suddenly cover their short positions. And we know of that as a short squeeze. So it's not unfounded. I mean, there is something to this. It's not just complete irrationality that's pushing these stock prices up. The only thing, though, that guides me in this, Hoda, which is why I say we avoid these, at least as long-term investors, is you don't really have any connection between the business itself, the fundamentals such as cash flows, earnings, revenues, whatever it might be, and the stock price valuation. There's so many comments out there right now. Oh, this is going to the moon. Hey, look, I made 200% in 24 hours. It's all about the short-term blips on the radar of a stock price. Very, very short-term oriented. That to me is very, very troubling. It's the same thing that you saw in the .com shoot, when that shot to the moon and then it crashed, it's the same thing that we saw in the irrational exuberance of the housing market that obviously led to the recession in 2008. You're starting to see this meme exuberance happening again. I would say even the housing market right now is kind of going through some exuberance. You got to watch out for these bubbles in the market because they can pop violently, and nobody really wants to be losing a lot of money in a short amount of time, even if you're excited about it at the time that you purchased it in the first place.
That's something that is sort of on top of my mind. My husband and I just bought a house at the top of the craze of the market, but we bought it because we moved from San Francisco to Southern California. So we had to find a place to live in, but it always bothers me. I thought about it, the housing market, and should we just rent, and all that good stuff. But same worries always applies to stocks, because you're investing in your house, but also you're investing in the stock. So it's very difficult to not get emotionally attached to it. But I like your approach. I mean, kind of reminding ourselves, this is not the very first time this thing happened. And in the past, we have had similar examples. And then when you go and read it, then it gives you this confidence that, yes, it may not sound like it's going to pop now, or it's a bubble. It's overly, everybody think this time is different. But, when you read that history, you see that actually it's not different. Everybody thought this time's going to be different again in the past history of the similar events. I love that. Sort of lens of looking back at what happened that previous time. Thanks for that.